Hi all, it's Catherine Burgess with Burgess Group Compass. We are talking about local Boulder County real estate and national real estate headlines. The important news is that it is similar in both categories. We have a lot of new inventory that's come to market, especially in the luxury market, and then buyer demand is somewhat curbed by the higher inflation rates right now. So it is likely that we have a calmer real estate market ahead. So getting into the weeds on this, we have in the local info, 157 new listings came to market last week. That was quite a bit more than in the last 4 years. 116 new properties went under contract, 116 properties went under contract. That was extremely in alignment with what we've seen in the last 4 years. Year-to-date under contracts are continuing to be really much lower. We had 1,499 under contracts last week. That's 35 less than we saw in 2020 after 2 months of shutdown. So, and about 250 to 300 less than what we've seen in the last years other than 2020. So our month's supply of inventory is on the rise. We're at around 2 months supply of inventory. Our overall inventory is still really low, so be sure to check the chart below it so that you can really see that. When we're talking about activity by price band, that's where the big news is. So last week we had, actually over the last 2 weeks, we had 37 new 2.5 million and above listings come to market. So that's a huge deal. That is in contrast with a typical 2-week period in which we might see 6 to 15 in a really robust week or set of 2 weeks come to market. So luxury sellers are clearly feeling like it is now is the time to try to get things sold. That's a reflection of what's happening in the equity market, as well as their understanding of the potential of a recession on the horizon. So we have had in all of the other categories in the activity by price bands, we've been seeing softer rates. There definitely is more inventory for buyers to shop. So it is possibly, we're still in the territory of a seller's market, but that luxury section may be moving into a buyer's market. It was a buyer's market mostly for the last 10-11 years, while the territory from 2.5 and below was a strong seller's market. So it could be that we're getting back into that range. The other thing to think about that's been important with this activity by price band chart is those price changes, which mean price reduction. So the number of price changes in the MLS has continued to go up over the last several months. We saw super low numbers in the early part of the year. We're now seeing 53 2 weeks ago, 55 last week. Those are really great indicators. Those are coincident indicators of seller confidence. So sellers are seeing the need to lower their prices to get their properties sold. And we have that in a chart so that you can see it down below. It's a dramatic change from how the market was functioning earlier. So sellers, again, take note that is, our market is really shifting, and you need to, in order to be successful, hear how it's shifting and make good change. So nationally, we have seen that our national sales are down month over month by 2.4%, year over year by 5.9%. We have a 2.2% month supply of inventory on a national level. So that is, an increase from where it was before. Do keep in mind that balanced market is a 5 to 6 month amount of inventory. So we're still nationally very far from that. The NAR just published a report in which they found that we are 5.5 million units of housing short. So as long as we have that massive shortage, and right now builder confidence is really down, so it's not likely that that is going to be changing as we're heading into this inflationary period with the Fed really trying to tamp things down, unless the government gets involved. And there is some push for the government to get involved to help increase supply of inventory. So the second home market is definitely on a downward trend. Rental rate increases are slowing. So the takeaways are that the Fed's efforts to slow the economy have been already successful from a housing perspective. Even though mortgage rates settled in the last 2 weeks a little bit and were better, we haven't seen a big increase in buyer demand as a result of that. So combine the lower demand with the increased inventory, and we are likely to see a market that is more comfortable for buyers than what we've seen in the last several years. So sellers, the takeaways are that if you are in the luxury market, you're going to need to create a product that is really very attractive to buyers, and it's at an attractive price. It's not the time of year when we can any longer say, now's the time to sell your hard to sell properties. They could still sell, but it will take some work and determination to get them there. Buyers know that this should be a much more friendly environment that we're going into. Way fewer numbers of competitive offers. We're already seeing that come down. We were at a high of 66%, and we're now down to around 60% of multiple offers. So, and sellers, when you do have multiple offers, number one, you can't expect it. Number two, you may have 1 or 2 offers, possibly 3, but it is unlikely that you'll be seeing huge numbers of offers at this point. So call us with questions. We're happy to be a resource. We will see you again in 2 weeks, and like, subscribe, and share. Thanks.